What's going on, guys? Josh Baldwin here, and if you're new to my channel, I make videos on personal finance and the latest in financial news. I also provide business coaching services for entrepreneurs. So if you're thinking about starting your own business, I'm now offering free business consultations, no strings attached. So if you're interested, you can sign up by sending me an email at madmoneymillennial@gmail.com, and I will set up a call with you to discuss how we can take your idea and turn it into a reality. All right, now please Hulk smash that like button and subscribe if you haven't already for more weekly finance updates. And in this video, I wanted to jump on the GameStop discussion train and give you my thoughts on all of this.
And that brings me to GameStop.
Checkout shares at GameStop surging another 51% today. The record move driven by a retail rebellion.
Now, a lot of you, I'm sure, have already seen this in the news or following the stock market and are curious to know what it's all about. Now, what is a short squeeze? A short squeeze is a phenomenon where short sellers place their bets on a stock's fall, expecting to profit, but instead end up hedging or buying their stock at a higher price to try and cover their losses on the sharp increase. For example, an investor expects the price of stock X is going to fall from, say, $80 to $60 and places a short option on that stock. Now, if the opposite happens and the stock starts sharply rising instead and jumps to, say, $120, the short sellers start incurring big losses because now they are forced to sell that stock at the higher price while it was only worth $80. So now they've suffered a $40 loss. Not only that, but you're now pressured to go and buy back that stock at the higher price to try and cover your previous losses and assuming you believe that stock will continue to go up. Now, this flurry of investors trying to buy back into the stock is what triggers what's known as a gamma squeeze. A gamma squeeze is simply a term that refers to massive call buying that leads to a sharp rise in stock price, which essentially forces further call buying and the stock to be pumped up at an incredibly fast rate. Now, if you recall from one of my previous videos on Bitcoin, I mentioned just how sensitive the markets are to human psychology. Now, what's really interesting in this particular event is, on one hand, you basically had a significantly large number of billion-dollar hedge funds trying to short GameStop stock, and on the other hand, you have the significant number of small-time retail investors operating out of these Reddit forums like WallStreetBets, reacting to the squeeze and conglomerating to try and ride the wave together in opposition to all of these Wall Street hedge fund companies. And by the end of this event, GameStop's valuation rose to $20 billion, a 14-fold increase from last month. Enthusiastic investors are banking on the fact that entertainment companies similar to GameStop, including AMC Entertainment, BlackBerry, and Nokia, among others, are turning more to profit from online and digital channels. In fact, one of GameStop's largest stakeholders, Ryan Cohen, former co-founder of Chewy, announced that he will be leading the effort on the board to turn the company's online transformation into a reality. Well, there you have it. My only advice is, if you are investing, please make sure you're only investing what you're willing to lose. As you saw with brokerage firms like Robinhood, there's always going to be an element of limitation and control with your money when you choose to invest in the stock market. When you sign up with a brokerage, you give them all of your information, you pay fees, you pay taxes, and all the while they can still pull the plug on trading activity as soon as one of their largest partners' wallets starts hurting. Now, a lot of you may be confused about what's happening with Robinhood. Are they being sued? What's going on? So people speculate that Citadel Securities, Robinhood's largest partner, were the ones responsible for restricting further trading on GameStop stock. Now, although this information was denied by both parties, you have to be doing your due diligence and make sure you don't ever make the mistake of getting your money tied up in places that it's no longer valuable or accessible. And as for the time being, I would focus on other companies that have an increased potential for another kind of one of these short squeezes. Companies like AMC Entertainment, Bed Bath & Beyond, they're all trying to follow the same sort of online and digital business model that's contributing to these large increases in company valuation. And once again, the reason for this is we're seeing greater and greater optimization and improvement with companies that have adapted this sort of online element, especially during COVID-19 times. So it's essentially the sign of a healthy and thriving company to be announcing new and innovative ways to adapt to the pandemic. All right, guys, short video today. If you guys have any questions, as always, you can leave a comment and I'll be sure to get back to you. All right, and as always, stay hustling, guys, and I'll talk to you guys next week.